Who creates money? Money is created and destroyed through the banking system. So, financial institutions, firms, and households all together create money. Firstly, when it is said who creates the money, physical money comes to mind. However, in today's life, 96% of money is held electronically as a bank deposit. Only 4% of the money is held physically in the form of cash as banknotes and coins. This is called central bank money. So the money is created in a digital form, which is called credit money, bank money. This money comes into existence via the loan process, bank lending. And this really depends on our willingness to be in debt. We are households and firms willing to be in debt for several reasons. For production purposes, say you open a family-owned restaurant. For consumption purposes, say you get a loan for your car purchasing. For speculative purposes, say you get a loan to buy cryptocurrency. Let's start with firms' willingness to be in debt. An entrepreneur has a business idea, producing smartphones. To bring this idea to life, the firm needs to set up a production system. Depends on what they are going to produce, they will need skilled or non-skilled workers. First, the agreement with wage earners is required. Once negotiation is completed, company applies for an amount of credit required for production. If the bank finds the firm is credit-worthy, credit will be created and this money will be deposited in the firm's checking account, debit account. This is a digital money. It takes a nanosecond for a bank to create this money. Let's keep it simple. This money will be transferred as wage payment as an income to employees' account after the production process. Employees will use this money for purchasing these smartphones. So eventually, money will return to the firm's account. The firm will use this money to pay their debt to the bank, and the money is finally destroyed when borrowers pay their debt to the bank. This is a financial system that works in a modern time. If we will explain it in a more simple way, we can describe it as follows. Think of people: a doctor, a baker, a farmer, a teacher. These people invent something called money to organize economic relations among themselves. And they write one on a piece of paper and distribute 100 of them to everyone. They will use these money in commercial relations among themselves. The doctor buys eggs from the farmer and pays 3 of this money. The farmer uses 2 of these 3 money to buy a bread from the baker. Everyone's children receive education from the teacher and pay 10 money per student. the teacher pays 20 of these earnings for the visit to the doctor. So everyone gets money in their account in return for the economic value they produce. Let's assume that this includes all people and all products in the world. It is going to be very complicated, isn't it? It could have been possible 1,000 years ago, when most people lived in their small villages and not traveling much around the world. But this is impossible in today's world. In modern times, the financial institutions perfectly regulate all these relationships by using the bank money, digital money. So 96% of money is in a digital form. Only 4% is fiat money, paper money, central bank money, physical money. Why we need this fiat money? For several reasons. How much cash you have in your pocket? For whatever reason you keep some cash in your pocket, the reason for holding central bank paper money is the same. Holding money for buying a cup of coffee, train ticket, newspaper, we feel less need for physical money every day because we use our touch cards in most of our purchases. We are in need of less cash in today's life. On the other hand, our access to cash money, central bank's money, is limited, isn't it? You can withdraw a limited amount of money from ATM. There is a daily limit of withdrawing cash from your account, no matter how much money you have in the bank. Let's say you live in the United States and you have millions of dollars in your bank account. You went to your bank and said you want to withdraw all of your money in cash. They have to provide this money to you. They will only need a bit of time. If there is no money in the bank, they will call the central bank, the Federal Reserve Bank, to print this money immediately for them. Can the central bank, Federal Reserve Bank, decline this request? No, they cannot. If they refuse this request, they will plunge the entire financial system into crisis. People will whisper to each other that there is no cash in the bank, so everyone will try to withdraw their money from the bank. That's why central bank is called the lender of last resort.